Uh, Good evening, all of you. Today we discuss about another sessions that mainly focus for tax administrations, exemptions, as well as the investment income from number 24 of 2017 New Income Tax Act. Right. Then, if you concern about the tax administration on this particular act, have the separate part 2 mainly concerned about the tax administration, right. As a business level syllabus, we mainly concerned about all three areas. One is registration, second one is tax return submissions, and accounting and other detailed submissions. Only these three areas we concern under this tax administration. Right. Under registration, under section 102, every liable person to furnish return of income for a year who has not already been registered, right, then shall register with the Commissioner General not later than 30 days after the end of basic period from that year. That is a concern or requirement with regard to the registration side. If any person liable to pay the taxes, they have to get registered and they have to submit the return. Right. If they are not already get registered, then they have to concern within 30 days they have to submit the return. Then if they are having some applications, then CG should be considered for the requirements, and if they accepted, then issue the TIN number. TIN number is says taxpayer identification number. Sometimes they may have some reason CG can refuse to register, and if there is a then it should be written notice should be submit sent by the within 14 days for making the decisions with regard to the reasons. Right, this is a requirement under 102. If you concern about the accounting and record, section 120 is relevant. As a section 120, it say taxpayer engage in business or investment activities, the require under this act to make return shall keep and maintain in Sri Lanka. And record and account sufficient record also all the transaction and ascertain gain or profit made or loss incurred in respect of the particular transaction. That is a requirement of with regard to the maintain the accounts. They have to keep the accounts with regard to business and investment, and there should be a sufficient record with regard to all the transaction. Based on the sufficient documents, that gain or profit they can identify by using this document. And if you concern about the account preparations, right, then approved accountant should be assets regarding accuracy and completeness. Right, there should be having the some certifications with regard to the accuracy and completeness. Then there is a doubt or whether normal audit opinion has covered all these areas, right. Then on when they making the auditing side, then approved accountant also more concerned about how to cover the accuracy and completeness certificate as a requirement of 102. Where the CG opinion that if they are not having some proper records, then keep by the particular person, in addition to the prosecutions of offence, then CG may direct to keep accounts as specified by the CG, right, if he think if there has an opinion by the CG. And normally records and books of the account they have to keep on the place of the business or investment activities. This is a requirement, but if they are having some reason, specific reasons, they can keep those accounts and details on other place with approval from the CG. And if you concern about retention of the records, normally there is a requirement they have to retain records for the 5 years period. If sometimes if they are having some sort of specific requirements with regard to the matters with regard to the particular year, they have to keep more than 5 years time those records. Right. If you concern about the language, normally account preparation should be maintain language Sinhala, Tamil or English. Right. If they are maintained by using other language, what they have to do is they have to translate to the particular whatever the required language by the CG. And if they are having some sort of communication with regard to the department and taxpayer, then they can use Sinhala, Tamil or English as preferable of the taxpayer side, as well as they have to use some Sri Lankan currency with regard to this communication process. And if you concern about the source document, especially mention about the source document include sales or purchase invoices, costing document, books, diaries, purchase orders, delivery notes, bank statement, contract and other documents which related with the element of the transaction. So, specifically mentioned those are the items, those are the documents we can identify it as a source document. Then if you concern about the tax return, normally tax return should be submitted by the taxpayer. This tax return is mentioned about all the calculation and chargeability, and as a specific form given by the Commission General in writing or by using the electronic media, they can submit the return, and as well as say stipulated date time should be submit, right. Then time and format and methodology have to be gazetted by the department. Then based on the gazette notifications specification, it had to be adopted by the taxpayer. Then if you concern about the required documents, then there is a requirement Commission General CG may specify forms from the return, and information should be furnished with related with the return and attachment and manner, whether they have to use on in writing or electronic media, it had to be specified by the Commission General. Then based on the gazette notification issue, on due course it may be decide what are the documents it may be submit. And if any taxpayer or on behalf of the taxpayer, any authorized agent, if they prepare the returns, then they have to sign and with regard to the accuracy and the completeness. And sometimes return may be prepared by the approved accountant, or sometimes other than full-time employee, they prepare the returns, then there is a requirement this particular person should be sign the return. And sometimes as a requirement, then Assistant Commissioner, they may request in writing to submit the additional return for the particular tax period in addition to the normal return, right. If they are having some changes or then they may have some reasons, then it may be requested. Then they have to give the time frame not less than the 7 days time to submit the return. Then if you concern about the other relevant provisions with regard to the return submissions, any person who liable to furnish the return, if he is not to submit the return, then they have to inform in writing and specifically mention within certain period they have to submit the return. Then some sort of extension time frame it may be allowed as a provision of the section 127. If return or statement submit by the taxpayer or if other authorized person, it shall be deemed to have been furnished by the person unless if they are having some contradicted is proof, if it is not the proper documents, then it should be recognized as a return submit as a section 128. And if you concern about as a section 129 person as there is a provisions, then department can request information return, right, that is related with the matters with regard to other person liabilities, right. Then based on the 179 department can request information return. And as a under section 130 it say CG may extend the time based on the requirement of the taxpayer, they extend the time by due date with submission of the return. It especially say this time frame is provided as a request, and then it may be having some sort of due dates they have to specifically mention, right. Then as a 131 taxpayer can be provide the authority to the other person to submit the return, and it can be taken as a valid return unless the contradictory is proved this is not the correct return which has given by the authority by the particular taxpayer. Those are the things we can identify with regard to return submissions, right. Then as a syllabus requirement we discuss about registration requirement and account and record keeping and the tax returns. Those are the syllabus content with regard to the business level. Then we move into the exempt income. Then if you know that as a section 9 it is mentioned about exempt income, and it is not provide the detailed list provided under the third schedules. As a third schedule they mention about each and every item out of this entire list, then we selecting whatever the items related with the business level syllabus, right. Normally business level syllabus we have to concern about the company tax calculations and charitable institutions, partnership and other body of person including trade associations and the club, right. Then out of this one, then I use actual coding as a schedule 3, right. Under schedule 3 H mentioned about that gain made on realization of asset consists of share quoted in any officer list published by the any stock exchange licensed by the Securities and Exchange Commission of Sri Lanka. Then gain made on realization of asset they can take as exempt, but it should be listed by the stock exchange commissions on Sri Lanka. Second one, interest derived to the charitable institution. When we prepare charitable institutions income statement, if those interest is derived to the particular charitable institutions, if commissioner is satisfied, those interest is solely used for caring to the child or elders or disabled person in home maintained by the charitable institution, then it can be taken as an exempt item. Then under J, it is connected with the prices. Any prices received by the person as a reward made by the President of Republican in Sri Lanka or by the government recognize invention, creation or any other research undertaken by the such person. That means it may be sometimes individual person or partner, or sometimes it may be a company. If they received any prizes with regard to the some inventions or some research undertaking, then it can be taken as an exempt income. Under item K, it is related with some received from the President fund established under President Fund Act and a National Defence Fund established by the National Defence Fund Act. If anything received to the any person, it can be taken as a exempt. As a L, any amount equal to the interest, right. If a word use amount equal to interest, then we should not be deduct any value. then entire interest component we can deduct, or a discount paid or allowance as case may be to the non-resident person or to the licensed commercial bank in Sri Lanka. Only these two parties they can claim those particular exemption. To the non-resident person or any licensed commercial bank, then issue any sovereign bond or any government bond by the government or on behalf of the government, those entire interest income they can take as a exemption. If you concern about the within lotteries, then gross amount up to 500,000 we can take as a exempt. It may be applicable for the any person up to 500,000 lottery can be taken as exempt. Then under item number O, with regard to the dividend paid by the resident company to members to extend that dividend paid to the attributable, then dividend from another dividend received, this particular company if it is declare the dividend, it can be taken as a exempt. I think better we can take a small example. Let's say company A, then company B. Now we concern about the company B. Company B declare the dividend. Dividend declared to the Mr. X, right? Then when they declare the dividend by the company, they used dividend received from the company A. Dividend received from company A. When they declare the company A dividend as a section 84, they deduct in withholding tax. Normally it is called as a dividend tax, right? That means A company declare the dividend, after deducting the withholding tax, B company receive the net dividend. Based on this net dividend, again B company declare dividend to the Mr. A. When declare dividend to the Mr. A, it can be taken as exempt, right? Why? Already withholding tax paid under the hands of the A company. Item Q, the profit and income from any properties donated by the royal or other grant before March 2nd, 1815, long years back, to based on these places, if any charitable institution, if they received any profit or income, those profit or income for the charitable institution can be taken as a exempt. Then if you concern about R, dividend from or and gain on realization of shares in non-resident company, where the dividend by resident company with respect of substantial participations. There is a word, technical word used, substantial participation in non-resident company in this paragraph, right? There is a definition for the substantial participation mean holding 10% or more value of shares in the company, excluding redeemable shares, together with control either directly or indirectly of 10% or more of voting power in the company. By considering these two, it can be decided this particular non-resident company having substantial participations, then if they receive any dividend or gain to realization of shares, then it can be taken as exempt. Then item number is any amount derived by the person, sale of any gem and subject to the withholding tax under the section 84. Then those gain or income can be taken as exempt. Then those are the things we can understand or identify as a business level syllabus. Those exemptions may be relevant or applicable as a schedule 3 and section 9. Then we move into third part of our discussions, investment income. Then if you concern about the investment income, then if you concern about the individual person, then employment income is the first priority. Then second priority with regard to the business income. Then if you concern about the corporate tax calculation, there should not be having any employment income. Then first priority should be goes to the investment income, business income, right? But second priority have to be identified for the investment income. Then we have to understand or identify how we determine the investment income, what are the things we have to consider. On this our discussions mainly be concerned about that applicable provisions, meaning of the investment, then item included and excluded when identify the investment income, and relevant exemption and final withhold tax payment. If you concern about the relevant section, section 7 is relevant for investment income calculations. The person income from investment for year of assessment shall be the person gain and profit from that investment for year. Based on the investment, they may receive gain or profit. Then this particular year it can be identified as a investment income. There is a definition under section 195. You all aware about that 195 is a definition sections. Most of the definitions include on the 195. As a definition, it say the owning of one or more assets include one or more asset similar nature or that are used in the integrated fashions, include past, present and prospective investment. Then normally we have some idea past and present, but here it is adding especially prospective investment. Still they are not making investment, but they are having some opportunities of investment, but excluding business and employment. Or game chances including lotteries, betting and gambling. Those are be identified under the investment meaning. And especially it say investment income shall include first one, dividend, interest, discount, charges, annuities, natural resources payment, rent, premium and royalty. If you remember, most of these items previous act we separately identify each and every sources. Separately we identify dividend income, interest income, discount, charges and rent, premium and royalty. But they are having some one items new for this new act, natural resource payment. If they are having some natural resources, based on this one we can identify the natural resources payment. The second one they included gain from realization of investment asset as calculated under chapter 4. Normally it is one word we can identify capital gain. If it is capital gain, separately we have to identify the under the investment income. There is a separate section chapter 4. The amount derived as a consideration for accepting or restriction on the capacity of conducting the investment. Then if you discuss about business also, we same wording we considered. If you remember when discuss about the business income, it say amount derived as a consideration for accepting restriction capacity of conducting the business. Here it is mentioned as an investment. What is mean of this? Right? If any person supposed to start the investment, but they are due to some restrictions by the other person, they may supposed to stop the investment, but due to the restriction they may receive some income. Those income should be categorized under investment income. Gift received by the person in respect of the investment. Gift received by the person in respect of the investment. Gift also received with connected with the investment. Let's say if any person supposed to invest in land, right? Then a land, real estate company, it say, if you are taking this land, this a small car you may given as a gift. It is also connected with the investment. Then those gifts should be taken as a investment income for the particular investment. Then winning from lotteries, betting and gambling. If they are having some sort of income through the lotteries, betting and gambling, it is also we have to categorize as a investment income. Then other amount required to be included under this act, right? Time to time it may be decided based on the practical cases and scenarios whether those we can categorize as a investment income or not. Then if you concerned about the excluded part, when calculating the investment income, we should exclude those items. First one, if they are having some sort of exempt amount or if they are having some sort of final withholding tax paid one, we have to exclude, right? Then under section 88, we categorize, we identify the what are the items we can identify it as a final withholding tax. As schedule 3, we identify what are the items we can categorize as a exempt income. Then B, amount that are included in calculating the personal income from employment or business. When we discuss about the business or when we discuss about the employment, if we identify those income under these categories, we should not be again taken under the investment income, right? Then I think you may have some sort of idea on new act, they are having some sort of priorities. First priorities goes to the employment, second one goes to the business, and third one with related with the investment. That's why when calculating investment income, especially we exclude employment and business. Employment and business. Then as a section 195, there is a definition with regard to the dividend. As a section 195, there is having some definition with regard to the dividend. As a definition, it say meaning payment derived by the person, members from the company, whether received as a dividend, division of profit. Whatever the remaining profit they divide among the members in the course of liquidation or restructure in reduction of capital or shares, share buyback or sometimes reduction of capital or otherwise. By using any method, if they are distribute the profit among the members, it should be categorized as a dividend. And it is especially include capitalization of profit, whether by way of bonus issue and increase the in amount paid off on shares or otherwise, and whether amount is distributed or not. Then if it is capitalized the profit, then it should be taken as a dividend as a definition of 195. Then there is a application for division. As a section 3 it say, already we discussed, exempt amount. If any company, if they distribute the dividend to their shareholders by using the dividend received, net dividend received from the other company, those net dividends mean after deducting the withholding tax, then those distributions taken place by the second company, it can be taken as exempt. And as a section 88, that is related with the final withholding tax payment, if a dividend paid by the resident company to the other resident person, if they deduct the withholding tax under section 88, it can be categorized as a final withholding tax paid by hand of individual person as well as the company. Then we should not be consider again when calculating the liability for the business. Then if you concern about the interest under section 195, there is a definition. As a definition it say the payment included on discount or premium made under the debt obligations, that is not repayment of capital. Normally when we make the installment, they are having some repayment of capital as well as the interest. For this purpose, we separately recognize interest component. Sometimes they may having some discount or premium. Those are we can take under this definition. Then second one, SAP or other payment functionally equal with the interest. Same similar with application with the interest, we can identify it under this definition. Then commitment, guarantees or service fee paid to in respect of debt obligations or SAP agreement. Then it is also we can categorize as a investment income, interest income for this purpose. Then distributions of the building societies. Then some funds or some companies, sometimes they maintain building societies. Out of building societies, if they distribute any profit, it is also categorized as a interest income as a definition. If there is a interest income under the third schedules, they are having some exempt. If those interest income is derived to the charitable institutions, if those income is solely used for the purpose of providing care to children or elders as well as disabled person in home maintained by the charitable institutions, if those purpose is satisfied by the CG, then interest can be exempt under a special agreement. And if you concern about non-resident person and any licensed commercial bank, if they received, if they incurred, derive the interest income or discount, it can be taken as exempt if those interest is derived from any sovereign bond dominated by in foreign currencies. It is issued by the central bank on behalf of the government. Then if you concern about section 88 with regard to the interest income, if interest is paid to the any resident individual, then it can be categorized as a final withhold tax payments, and same as for the charitable institution also, if they receive dividend as a net, that means after deducting the withhold tax, it can be categorized as a final withhold tax payment. Then if you concern about schedule 5, there is a relief. Then schedule 5 concern about the qualified payments and relief. Under relief it say, in the case of individual person who is identified as senior citizen in the year in which interest arrive from financial institutions up to 1.5 million for each year of assessment, they can categorize as a relief, as a, it is similar with the exemption. Then be concerned about the other applications. On previous act, those other income also we categorize as a separate source of income, but on new act, all the balance income, it is categorized as a investment income. If you concern about the dividend discount, normally discount we can identify if they are having some transferable documents and before the maturity date, if any person release this responsibility, then it can be categorized as a whatever the income that particular person arise can be categorized as a dividend. Let's take example, if any person receive the 1 million check, if they are having some post dated check before the particular date, if any other person release 900,000 on behalf of the 1 million, this whatever the person who release this one, they can earn 100,000 at the date of actual date specified on the check. This amount we can identify it as a discount income. And if you concern about the charges, normally charges may be arise due to the deed or based on the court order, due securities on income from the properties we can see. And if you concern about the premium, the means if any person received some amount more than what they entitlement. Let's say we can take as an example, if any person own the property, if he rented out, in addition to the monthly rent income, they received key money at the beginning. Then it can be categorized as a premium. Why? Normal their entitlement is a rent income. In addition to the rent income, they receive the key money at the beginning as a income related with this particular property. Then if you concern about the annuities, normally we identified they are having some circulate in the passion. Then periodical installment payment they receive. Sometimes it may be monthly, annually, or biannual or quarterly. Then they are having some sort of circle of pattern to receive the income. It is categorized as annuities. Then as example, if receipt of monthly payment after contribution of the pension fund, at the beginning they make some contributions, then it is become maturity, then only each month, sometimes each quarter they receive the receipt from pension fund, then it is a annuity. We have to consider separately under the investment income. Then as a schedule 3, there is a exempt item. If any senior citizen, if they received annuity from insurance agreement, if period not less than 10 years purchase from the purchase, then it can be categorized as a exempt annuity income. Then if you concern about the new item, natural resource payment. Previous Act doesn't mention about this application, but new Act it is mentioned focus for the natural resources, and based on the natural resources, if they received any income, it is identified as a natural resource payment under section 195. Natural resources mean mineral or petroleum or water or any other non-living or living resources that may be taken from land or sea. That's a specific meaning. Then it further define natural resources payment mean payment include the premium or like payment for the right to take the natural resources from land or sea, or calculate on in whole or part by reference to the quantity or value of the natural resources taken from the particular land or sea. It means if any person identify the natural resources, to take these natural resources, sometimes they have to pay some amount to the other party. Sometimes if you concern about the landowner, they have to pay some value to the landowner, right? Then this may be identified based on the quantity of natural resources taken, sometimes value of the natural resources taken. Then those amount it can be categorized as a natural resource payment. Then there is a small example based on this one. Sometimes you can identify clearly how we recognize the natural resource. Mr. A owned the property that he mainly used for the agricultural purpose. That is a normal application. The company is approached this land, and this company is mining company. Then year 1 million payment made to the Mr. A, and gets some concern for right to enter this land and do some survey, whether they check whether existence of the certain mineral. Year 2, company discovers substantial quantity of various mineral in this land. Then they sign the agreement for the 5 years time. Mr. A agree with this agreement, and they mention 5% of value of mineral extracted from this land should be paid to the Mr. A. Then extraction has been started on year 3. Then based on this agreement, 2 million worth of payment they made under this requirement. If you analyze this one, year 1 actually it is only just taking the right to enter this particular land, therefore 1 million payment it may be taken as a rent income for particular property. Then year 2 they discovered no any income received to the Mr. A, Why? Only just having some discovery or research period. Then year 3 onward, they start to extract the mineral from this land. Then they received 5% value of mineral extracted. Then actually whatever the amount they received, it should be categorized as a natural resource payment due to this natural resources taken on this particular land. Then we move into the next item, rent. As a section 195, there is a meaning to identify the rent. The meaning a payment include the payment of premium or like payment for use of or right to use the property in any kind. If any person use the property, then to provide this right to the particular person, then owner of this property, they are collecting the rent. Then this normally called as a rent income, and including the payment for rendering of or undertaking the render or assistant the ancillary to use or right reference to the para A. Right? Then they are providing some rendering one, and they are allowed to use for the particular persons to use it. And it is excluded especially natural resources and royalties. Those are excluded when we identified about the rent income. Under rent income, we can see, we can identify some relief available for the individual person. Schedule 5 it say, in the case of individual person with rent income from investment asset, when calculating this value, we can deduct 25% of total rent income for the year of assessment, being relief for repair, maintenance and depreciations related with the particular investment asset. If you remember previous act, when we calculate about the rent, we calculated based on the rent, gross rent, then we can deduct the rates. In addition to the rates, 25% repair and maintenance allowance we can deduct. Same applications here, only difference is we can directly calculate 25% out of total rent income. They can deduct. But there is a restriction or conditions. If any person, if they take actual expenditure with regard to the repair, maintenance, depreciations, they are not eligible to take the 25% allowance with regard to this. Then section 195 discuss about the royalty. As a definition, it say payment include the payment of premium or like payment derived as a consideration for use of right to use or copyright of literary or articles or scientific works and softwares, videos, audio recordings like electronic formats or otherwise, and it say use of right to use patent, trademark or designing or model of payments or secret formulas, we can categorize as a any income categorized as a royalty based on the intangible asset belongs to the particular person. And it say further it say use of right to use any industrial, commercial or scientific equipment, use of right to use with regard to the information concern, industrial, commercial or scientific experience. Likewise, they are having some list based on the list we can categorize any income received under this list as a royalty as a definition given by the section 195. Then if you concerned about the gain from realization of investment, actually it is also connected with investment, but separately we identified under the chapter 4. Normally it is called as a capital gain. Then if they are having some gain due to the realization of investment asset, it should be liable to tax with the new act. Then when liability be concerned, if a particular transaction if is more than 50,000 and if belongs if concerned about the overall year, if they are having more than 600,000 gain, they have to consider for the capital gain tax. Then if you concern about the gift on as a definition and section 7 also, it say if any gift received in respect of investment should be taken as investment income. There is a definition under section 195, gift mean transfer without considerations or with considerations the extent of market value of the particular property. That means if any gift received to him, if sometimes it may be received on free of charge, sometimes it may be received less than market value they have to pay. Those two situations we identified gift received the particular person as a definition given under section 195. Then winning from lotteries, betting and gambling. Then winning from lottery, betting and gambling are specifically deemed to be income from the investment. Then especially it is added under the investment income. However, as section 10 it say no deduction shall be made out of this lotteries, betting and gambling. But if if any person doing some business, they can allow to deduct those expenses. Then if you concern about the exempt, as schedule 3 it say any winning from lotteries if gross amount less than 500,000, those income can be categorized as exempt income. As well as if you concern about the final withholding tax payment received by winning lottery, rewards, betting and gambling, they have to deduct the withholding tax. Then if it is deducted, it should be categorized as a final withholding tax payment by the hand of receiver. There is a small two example, then based on this example we can get some understanding how to work for the tax purpose. Mr. A won 1 million worth of lottery. For this purpose they expend 100,000 to purchase the ticket. But when they recognize the lottery for the income tax purpose, entire 1 million they have to recognize, but they can't deduct expenses incurred with regard to this particular lottery. But if you concern about the second example, Mr. A run the gambling operations, then the gambling operation whether it is illegal or legal, then it is considered for the tax purpose. And when they calculate about the profit as a business, they can deduct the expenses and loss. Then likewise if it is business they can deduct, if it is not business there is no any possibility to deduct the expenses out of lotteries. Then if you concern about the investment income, then sometimes those investment income having some business nature. If it is business nature, it should be categorized under the business income. It is important to determine first whether this taxpayer is conducting business or investment. Let us say if any person purchase land and sell it out repetitiously and within shorter period they do, right. Actually a land is an investment asset, but if they are doing as a business, it can't be categorized as an investment income. It should be categorized as a business asset, and a business trading stock actually should be identify the profit or loss based on this. Then we based on some example we just identify whether it can be categorized as a business or whether it is categorized as a investment income. Investment return that are effectively connected with the business, then we have to categorize as a business income, right. Then if you remember when define business income, it say if any income if it is effectively connected with the business, it should be identified as a business income. Example 1, Mr. A is engaged with the sale of motor vehicle. He purchased showroom in order to expand their business. At the beginning there is no much more transaction, therefore they are supposed to decide some part for rented purpose, right, allocate for the rent, then they earn some money. But can we categorize as a rent income? No, it is not possible to categorize as a rent income. Reason is that why this is they rented out and take the income, but this particular building is take for use for their business, take to use for their business, right. Therefore, it say whatever the income effectively connected with the business, then it should be recognized under business income. As this scenario, this rent income should not be considered under the investment income, it should be considered under the business income. Then if you concerned about example 2, Mr. K run the hotel, as it is profitable business, he invests some of excess funds in the bank and gets some interest. Further, K purchase the residential property for excess fund, then ultimately they rent it out and they receive the income. Then if you concern about the interest income on deposit or rent income on properties they own, it is not effectively connected with the business. Why? By using the excess money, they acquired and separately they identified, and it is used for the investment purpose. Therefore, those are cannot be identified as effectively connected. Therefore, whatever the income received, it should be categorized as a investment income. Then, if you concern about withholding tax payment, schedule section 84 is relevant. Then interest or discount paid by the person other than senior citizen, normally interest or dividend paid by the financial institute or government. When they make the payment, they have to deduct 5% withholding tax. And if it is paid to the interest to the senior citizen as a regulations given by the department, up to 1.5 million can be taken as exempt. Thereafter, they have to deduct 5% withholding tax. If you concern about the rent income, as a present provision of the Act, then out of rent income they have to deduct 10% withholding tax, even this value is single cents. So, there is no any threshold limit with regard to the rent under section 84. Then if you concern about dividend charges, natural resource payment, royalty, premium, retirement payments, then they have to deduct 14% withholding tax. And if you concern about the gem sold on auctions conducted by the gem and jewelry authorities, then out of their value 2.5% should be deduct as a withholding tax. Then exemptions may be relevant with the dividend as a second schedules. Then if notwithstanding to the anything to the first schedules, then normally rate decided based on the first schedules. Rate of tax to be withheld from the dividend paid by the company to non-resident person members should be 0 rated. If the company paying withhold tax has been incurred more than $1,000 million on depreciable asset, then they can enjoy enhanced capital allowances as provisions given under second schedules. Then due to this one, if they receive some dividend, it should be categorized as a exempt from withholding tax. Then here and there we discuss about final withholding tax. Here under section 88 we can refer, we can identify what are the items can be considered as a final withholding payment. Dividend paid by the resident company to non-resident company we can categorize as a final withholding tax. Interest paid to the non-resident individual or charitable institutions we can categorize as a final withholding payment. Receipt by winning lotteries, reward and betting and gambling we can categorize on this basis. Payment to non-resident person also we can categorize as a final withholding tax with certain conditions required. Then if you concern about the calculation basis, investment income calculated for income tax purpose, if it is regarding individual person on cash basis, for other accrued basis. What is the meaning of accrued basis? Then whether it is received or not, it should be recognized as income. On that basis, investment income can be identified for the tax purpose. As a section 29, if investment is jointly owned by the particular parties, then amount to be included or deduction should be proportionate among the joint owners, and they have to identify the investment income for the particular investment. Then we can identify calculation of the assessable income of the investment. I think here by using this structure, you can identify investment income from the investment, right? Then deducting exempt amount and final withholding tax payment and amount include on employment and business, right? By deducting this one, we can identify the liable income for the investment. Then out of this value, we can deduct the allowable deductions under the assessable income. If you remember, when we discussed about the specific deductions, we concerned about some section 12 interest expenses they can deduct, and section 18 finance cost they can deduct with regard to the financial instrument, and section 19 losses they can deduct. Likewise, allowable deductions, sometimes based on the general deductions as well as main deductions, they can consider to arrive to the assessable income. Then finally, we can identify the assessable income for the investment income. This is the normal calculation with regard to the identifications. Then we have understanding how to identify the business income, or how to arrive to how to calculate up to the assessable income of the business, and by using this one we identified or calculate assessable income of the investment. Then they having some small questions. By using this one, we try to identify whether we can take any liability with regard to the investment. Determine whether following items can be taken when calculating the investment income. If any person receive dividend income which is subject to the withhold tax 14%, actually it is a investment income, but under section 88 it should be identified as a final withholding payment made. Therefore, when calculating the assessable income, we should remove this value as a final withholding payment. If you are concerned about royalty income which is subject to the 14% withholding tax, actually this is not recognized as a final withholding tax. Therefore, when we calculating about investment income, we have to consider the gross value, then we can arrive to the assessable income of the investment income. Then rent income which is subject to the 10%, they receive the rent income, but it's already deducted 10% withholding tax. When calculating this rent income, what we have to do is we have to identify the total gross income. Out of this 25% we can deduct for repair, maintenance and depreciations. Then balance part we can consider for tax purpose, right? Under this tax credit we can consider those withholding tax. The interest on savings account which is subject to the withholding tax 5%. Then normally as a provision of section 88, if any individual person, if they received interest income, net interest income, it can be categorized as a final withholding tax paid income. But if you consider about the company, then it is not categorized as final withholding tax paid income. Then if you concern about gain from realization land, normally gain land is we categorize as a capital asset as a definition given on the 195. If any realization received from the land, we should be categorized as a capital gain. Then based on this provision given under section chapter 4, we have to identify the gain and it should be liable on that basis. Actually it is an investment income and separately calculate as a capital gain. Gain from realization of machine, which is capital allowances, has been claimed for the tax purpose. If machine is claimed the capital allowances, it should be categorized as a depreciable asset. Then if they are having some profit or loss due to the depreciable asset, it should be calculated under the business income. It cannot be recognized as a investment asset or whatever the realizations, we can't categorize as a gain or income from investment. At last, we discuss about rent income received on partial rent in the business premises. Then actually, by concern about their business places, partly they rented out. Then if they receive the income, it cannot be categorized as a rent income received from the investment, right? It is actually, it is received the rent income, but it is part and partial or effectively connected with the business. Therefore, this income we should be recognized under the business income. Those are the things we can understand. Then by using these practical applications, we can get some idea how to apply for the tax purpose. Then we move into our last topic, other income. Then as a normal identifications, they have the 4 sources: employment, business, investment and other. If you concern about the company, normally we can identify only 3 sources, right? We can't see any employment income for the company: business and investment and others. If you concern about others, if anything we can't categorize as employment or we can't categorize as a business or investment, then if they are having some fixed base or recurring nature, we should be understand or identified under the other. Then it say as a section 8, person income from other sources for the year assessment shall be that person gain or profit from the any sources whatsoever for years not include profit of casual or non-recurring nature. If it is casual or if it is a non-recurring nature, we should not be identified as other, right? It is actually sometimes out of scope. Then other than that, we have to identify all other remaining income under the other income. Then when identify the other income, if they are having some exempt income, if they are having some final withholding payment income, we have to remove. And if it is identified employment income, under employment income or under business income or under investment income, we should not be categorized as the other income. Firstly, we have to see whether they are having some possibility to identify employment income, whether they are having some possibility to identify business income or whether they identified possibility on investment income. If so, we categorize as those income on the relevant part. If not so, if not possible, if it is fixed base or if it is recurring nature, then it should be categorized under the other income. If you concern about this applications, then calculation of assessable income of the other, right? Assessable income of the other, then we start with income from other source, right? Then we can deduct any exempt amount identified under the other source. Then if they are having some final withholding tax amount, we identify as section 88, we can remove here, and amount include on this item, but already we identified under the employment, business or investment, we have to remove. After deducting this one, then we recognize liable income for other sources. Then out of these other sources, if they are having some allowable deductions, we can take it. We can deduct, and finally we calculate the assessable income for other source. Then those are the items we can categorize or we can identify under the other source. I think by using this details and discussions and structure, you can identify how to recognize the investment income and how to recognize other income. Then what are the exemptions available as section 9 and section 3, schedule 3, and what are the relevant final withholding tax payment under section 88, and what are the definition with regard to the 195. Then those are the things you have to get some understanding. I think as an open book exam, no need to remember all these definitions, all these facts available. But what you have to do is, you have to well recognize, well identify where it is, what is the relevancy and what is the basic concept behind this. Then for the exam purpose, easily you can use this particular documents or act as an open book. But if any open book exam, then little bit you have to concern how to use this open book. If not so, you can't manage the time within this time frame. Therefore, then you can manage. There should be a pre plan and pre work to use the open book. Therefore, new act having some simplifications. Then this discussions we provide, we try to give some reference to with regard to the each and every sections for relevant areas. Then by using this one, you can understand or you can get idea how to use it. I think you may have some clear guidance and directions by using this webinar series. Then based on this knowledge and understanding, then you can ready for the exam. Then we make some further discussion if possible in future. Then with that concern, we conclude our sessions, and thank you and good night.